everybody, welcome to the Basis Points Podcast. I'm Kevin Flanagan, head of fixed income strategy at Wisdom Tree Asset Management. Well, the month of April is no doubt going to go down in media lore as a month to remember for the financial markets. And, we've been advocating an active passive barbell strategy as our core solution for fixed income investors as a way to navigate what we thought would be an uncertain and volatile investment landscape. And this time-tested approach offers investors a means of having the flexibility for what will ultimately lie ahead, with the active portion of the solution offering a means to be responsive to changing investment conditions. Now, the Bianco Research Fixed Income Total Return Index, that is BTRINDX, is an active core strategy that underscores the importance of this approach to fixed income investing, where a repositioning was recently implemented. This index is based on a qualitative and quantitative input, including economic data and interpretations of government policy. And the characteristics reflect how this index would presently position a portfolio of fixed income ETFs seeking to achieve maximum total return over a comparable baseline or benchmark neutral portfolio of fixed income securities. And in this relative position, there are 5 specific inputs: duration, yield curve, corporate credit, securitized, and conviction. So let's go through the rationale for each of these 5 for this new repositioning. And in terms of duration, the index shifted from a neutral standpoint now to an underweighted position. As a result, the index now has a 90% underweight compared to the benchmark's duration, which is designed for a potential rise in interest rates. Let's go to yield curve positioning. And the index continues to have here a bulleted yield curve position with an overweight to the middle part of the construct. Remember, a bulleted structure is a bond strategy that focuses on maturities that are concentrated around a similar maturity on the yield curve. In terms of corporate credit, the index is 70% underweight in credit here, and that's due to strong corporate bond issuance, in other words, increased supply. On the securitized side, due to relative value considerations, the index increased its overweight exposure to mortgage-backed securities from 130% to 150% relative to the benchmark. And then finally, the index removed its 20% allocation to senior loans and positioned a 10% allocation to emerging market local debt, utilizing Wisdom Tree's Emerging Markets Local Debt Fund, ELD. So, wrapping things up, the potentially changing bond investment landscape and heightened volatility compared to years past can represent a challenging backdrop for fixed income investors. And the Wisdom Tree Bianco Total Return Fund, ticker WTBN, which seeks to track the price and yield performance before fees and expenses of the index I mentioned, BTRINDX, offers investors an active core strategy to help navigate their bond portfolio for what may lie ahead. So I'm going to end it there. It's going to continue probably in the near term here, weeks, months ahead, to be a bumpy ride. Hang in there. We'll be continuing to provide thoughts, insights, and solutions. Tell your friends, tell your neighbors, tell your colleagues about the Basis Points podcast. We'd love to hear feedback from you. Have a great rest of the week, everybody, and be well.